How Luxembourg became a hidden money capital. There's a country smaller than Rhode Island where more money flows through than almost anywhere on Earth. Not metaphorically. Literally. Luxembourg holds over $4 trillion in investment funds. That's more than Germany. More than France. More than any country in Europe except one. And most people couldn't find it on a map. This isn't about tax havens in the Caribbean or Swiss bank secrecy. This is about something more sophisticated, more legal, and far more important to how global wealth actually moves. Luxembourg has 600,000 people. If it were an American city, it would rank 17th, right behind Seattle. Yet it manages 13% of the world's investment funds. It's the second largest investment fund center on the planet after the United States. Walk through Luxembourg City, and you won't see anything strange. There are banks, sure, law firms, but also parks, bakeries, normal life. The weirdness is in the numbers. The country's financial sector is 25 times larger than its entire economy needs. That's not a typo. 25 times. So what happened? How does a tiny nation wedged between France, Germany, and Belgium become the invisible backbone of European finance? The story starts in 1929, but not how you think. Luxembourg was broke. It had built its economy on steel, and after World War I, steel wasn't enough. The government looked around and realized something useful. They were small, they were irrelevant, and nobody cared what they did. That's an advantage if you use it correctly. In the 1960s, the United States passed a law limiting how much interest American banks could pay on deposits. So banks started moving dollars to Europe to avoid the rule. These became known as Eurodollars, dollars held outside America. And they needed somewhere to live. Luxembourg said, "We'll take them." They created the first regulatory framework for these orphan dollars. No heavy oversight. Low taxes. Fast approvals. They built a system designed for one purpose: make it easy for money to arrive and easy for money to leave. Here's how it works now. Let's say you're a massive investment firm. You want to set up a fund that pools money from investors across Europe. You have options. You could base it in London, Paris, Frankfurt. But Luxembourg offers something none of them do: speed and certainty. In Luxembourg, you can establish a fund structure in weeks, not months. You get access to treaties with dozens of countries that reduce taxes on cross-border payments. You can repackage and move assets between funds without triggering capital gains. And crucially, you get a government that views finance as the entire reason the country exists. They don't just allow this. They engineered it. Luxembourg employs more people in fund administration than in manufacturing. The government updates financial laws faster than almost anywhere in Europe. When the European Union creates a new financial regulation, Luxembourg implements it first and markets themselves as the compliant option. It's not a loophole. It's the system working exactly as designed. Now here's where it gets strange. That $4 trillion sitting in Luxembourg? It doesn't stay there. The funds are legally domiciled in Luxembourg, but the money itself is invested globally. In American stocks, Asian bonds, European real estate. The country is essentially a legal address for wealth. A mailbox that happens to have a flag. This creates a bizarre situation. Luxembourg's gross domestic product is about $70 billion. But over $4 trillion flows through its financial system. Delaware did a version for American corporations. Small places realized they could compete with large economies by offering not resources or labor, but legal convenience. Luxembourg is now so deep into this system that it can't leave. Finance is 40% of tax revenue. The country has more banks than gas stations. If global regulations tightened, if the European Union cracked down on fund structures, Luxembourg wouldn't just lose an industry. It would lose its primary reason for existing economically. But here's the tension. No one really wants to stop it. Investors like efficiency. Governments like foreign capital. And Luxembourg offers both without the mess of actually holding anyone's money. So Luxembourg isn't hiding money. It's organizing it. Making it legal. Making it fast. charging a fee. And the question isn't whether this will continue. It's what happens when everyone realizes the world's financial system is increasingly just addresses, trees, and very good lawyers.